Hello traders, and I hope that you are doing well. It has been a while, and as always I want to say thank you to everyone who's shown Vertex support through Instagram, through Telegram, and whatever. And also thank you for the messages about the content that we've been giving in the free Telegram group. um, if any of you haven't joined, the link is below. I know I haven't been posting on YouTube, but I've kept the Telegram group running. And if you have been following the Telegram, the only reason I've not been posting on YouTube is just that I've not been well medically. To be honest, to put effort into YouTube, I was more focusing on the students with the energy that I had. Um, but I'm a lot better now, and I'll start posting again. But another reason why I didn't really want to put too much effort into YouTube is because after releasing the content that we did, like especially this video that I think I posted again, this video here, it was almost like I was receiving threats on Telegram on a daily basis, even though I clearly stated, I mean, I didn't invent order blocks, I didn't invent this type of trading, and I've given credit where it's due many times. And but it's gone to the point where, to be honest, I don't really care at the moment, because I know the value that we provide, and the value that I provide myself is, I'm happy with it, and many of our students are. But anyway, what I'm going to go through in this video is this trade that I took. So here's where I sent it into the students, and that's the trade that I took. So it's on New Zealand dollar, and I'm going to explain the thought process behind it. So this trade, the only part I'm not going to show is obviously the entry criteria as usual. That's for you to figure out if you can. Obviously, that's what our mentorship is for, to find the our refinement rules. And that's the only difference between us and smart money concept. This actually sounds like a pitch. Sounds like a pitch to you guys. I mean, it sort of is, to be fair. But I want to give you guys as much value as possible, and I hope this video is useful. So generally, when you're looking for a trade, right, we go through your top down analysis. And to be honest, actually, well, I'll explain it first. So obviously we have our solidified low, our solidified high, and this was only broken here. Now here, what we can see is a potential liquidity grab, but there was no follow through, right? But for me, that was not a significant high for me to consider anything off that. But anyway, what we can see is, obviously, from this wick, right, we also have a move down, but it's failing to push further down. Okay, it failed. So this can now be considered as reluctance in price. Okay, but what we can see after that is a bullish move up, which went on to break the structural range that we were looking at. Now, with that being said, we know now that this was the POI that obviously that we're looking for. So we know that when price gets into here, we basically want to find an excuse to look to go long, basically. All right. Bear with me. Let me close that. There we go. So we want to find an excuse for price to go long, basically. But I did not do that, because, to be honest, this is all I did was I woke up and I saw that we had this breaker structure here. So what we can see is a solidified low, right? We have this high, and this high was broken here. Again, what we can see here is a wick out, but it failed to come lower, right? So it wasn't a liquidity grab in this sense, right? But what we can see is reluctance in price, and then we break structure and create a solidified high. So what that is basically telling us, and if you're referring this video to the screenshots that you see in the Telegram group, this is market intention, right? This is where you see the intent. So at this point, you want to find your trading range, right? Which I've explained on previous videos. So obviously this is our high and our low is here. So that is the trading range that we can focus on. So let me use the replay tool to go back to here. Okay. Now, it's very clear, obviously, where the POI actually is. Now, some people like to have their POI to be like a solid candle with a little wick. For me personally, I feel there's enough information in the wick. Well, I feel there's too much information in the wick to ignore. And obviously price was driven from here that caused this intent. So what that means is this is the source of this move. It's simple as that. It's basically you find your break structure and you're looking for the source of that, and you're looking to trade off there to trade a continuation. Even though, without even looking at this higher time frame perspective, I mean, I didn't even look at this until I was setting up for this video. To be fair, I was just simply looking for a quick trade to finish off the week. This was a Friday that this trade was taking place. So yeah, now that we have this in place, it's just simply being patient for price to get in there. Oh, sorry. There we go. And at this point, that's the only point where you'll need to look for. This is when you need to be alert. Obviously, if you're following the free strategy, you probably would have just placed a trade here. Your stop loss below here. That's not that big actually, to be fair. And your first take profit would be here. Now I did set a take profit, and usually I don't. The reason I did this time is purely because I was only looking for an intraday move. I didn't want to look for anything more than that. Given the fact that it was Friday and I didn't want to do a weekend hold, and I didn't feel that it was in the position to go for a full swing position. Let me turn the notifications off. I don't know if you guys can actually hear it. Bear with me. There we go. We shouldn't hear that anymore. Apologies. But from what we can see here, and also something that else to note, and it's something that you don't need to focus on as such, like to an extent where you're completely counting the candles, but compare the momentum difference, right? Look at what the momentum is. Not only that, we also have inefficient pricing. So with that being said, it's basically building the confidence and the confluences for the trade that you're about to take. Now obviously if you're using the free strategy, you could have just set an order obviously at that, but we could probably refine that further down if you wanted to. Let me go to the next one. Let me play this out just a little bit more. There we go. So we can probably doesn't make a huge difference, to be fair. Bear with me. It's probably reacted to. I assume it's going to be this one. Yeah, so it reacted off that, cleared that, and that was the last point, because what we can see here, if we go here, that was the last point of imbalance in pricing that needs to be corrected. As well as that, what we can see is obviously when you get a wick like this, right, when you get a wick like that, you know that this is where the buyers came into play, because the sellers are exhausted in that candle wick. So which is why this refinement may seem a little weird for some of you, but it's something that we teach in our mentorship to explain the reason why. So it makes sense why price came here. But if you obviously, when it's just a POI, you only need like a rough idea. If you don't want to be too precise, and that's when the process of when that's the process of over refining, that's when it does have its downfalls, because if you over refine, say if you refine to an OB within here, that's probably further down, and your alert wouldn't have triggered, and you would have missed this whole move. Whereas for me, I like to have a 10 pip range also, which tends to give you enough, because if you have it too, if your point of interest is too big, what you can do is you can actually struggle and get a lot of fake outs coming in and taking you out, or you're entering too many trades before you find the correct one, and to be honest, that's not sustainable at all. So you want to find one that looks clear for you, and you want to find the range that is ideal for you in that situation. And for me, a 10 pip range is more than enough, and it just makes sense for me to do so. And from my back testing, I found that 10 pips prevented those fake outs, because I had that same issue of having the fake outs. Another thing that we can actually talk about in this video is, and this is what's interesting. So the reason why we considered, sorry, I keep moving this. The reason why, obviously, we got this solidified low and then this solidified high. The reason why this is a key level that was described in the free Telegram group in the second screenshot, I believe, in part 2, is if you think about it in terms of what we can see here, right? This is bearish structure, right? Bearish order flow as well. For order flow to be continued, you expect this to be mitigated. However, it was violated, okay? It wasn't respected. So what that means, this is your first sign of where is it then? This is your first sign of order flow being fractured or disrupted, or however you want to call it. So that's your first sign that, that's your first initial intent. It's not intent like this because it wasn't really a semi-violent or violent move, but this is a good sign because in theory, you should expect a reaction from here, right? But that wasn't the case. What we did have was price violated it, and then there was reluctance in price to go further down, because what this could have been, if I get rid of the brush tools, because what this could have been here, right? So obviously your POI is here. What this could have been a liquidity grab. Sorry, that's annoying me. There we go. This could have been a liquidity grab, and obviously price would have carried on. If it was a liquidity grab, it would have had to go on to break structure of some sort, right? But it wasn't that. Okay, price is struggling. So what we do have to build the confluence is the fact that we have order flow being disrupted, right? And we have reluctance in price. That leads to an intention. So this POI for us is solid for us, and with also the fact that this is the reluctance in price, right, which from a failed liquidity grab, which led to intent, we also have our point of invalidation being here, because because this also becomes our structure point. So if it does fail, if it does break that on this, it fails a whole setup. Obviously, okay, that's obviously that's very clear. Okay, there's no question about that. That's without looking at your higher time frame perspective, because looking back now, what I can see, and this is something that I didn't actually focus on, and this is when top-down analysis does come into play, and I didn't do it. And as I said, I was just looking for a quick move. But what we can see is from previous moves, right? If we see what's going on here, this obviously clearly mitigated something here, okay, and then we also have a mitigation play here. Oh wait, oh, wrong one, sorry. We have a mitigation play. I was wondering why I wasn't doing that. There we go. We have a mitigation play here. So our true point of invalidation is here, right? Anything that goes below here is going to disrupt the full order flow. And bear in mind, we have this full daily position because we have this whole daily POI. So in theory, if price was to break and fracture order flow from here, right? If it was to break below, then this situation of looking to go long wouldn't make any sense. But this move that goes up here, it makes sense. So this is obviously mitigated something that's here within that wick, right? So that's something to sort of think about when looking to trade. And this video also shows you. So I could say this trade was somewhat lucky, because the true move actually originated from somewhere further down, and yeah, it's something that in hindsight, looking back, it's something that I should have focused on to see if there's anything below here that needs to be mitigated, because judging from the price action that I can see here, there was a clear entry wherever this wick came back to. So yeah, that's something that I would change moving forward. And this is something that's useful for you guys to see, because regardless of how long you've been trading, regardless of how long you've been in the markets, um, you're always going to learn, and you need to be open to that. You need to be open to um, learning new things and understand that you will make mistakes. So in theory, this was somewhat of a mistake because I completely disregarded what was going on further down. However, even though I've said that, this trade still makes sense. Okay, and the thing is, it needs to make sense to you. It doesn't, like, regardless of whether you're using our free content or whether you're in the mentorship. To be fair, if you're in the mentorship, I don't expect you to watch this video, but if you're using the free content, you need to make it make sense for you. And what I realized is some of you guys who are messaging me that are using the free content, or some of you are even using the leaked content and still messaging me, which is fine. um, uh, what I realize is you're trying to see what I see, and that's never going to work. You need to see what you see, and that's where the development comes from. Because what I realized is from the various sources that I've learned from, and you can probably find where I've learnt from in previous videos. I won't list them out now. Um, you know, I couldn't replicate what others were doing, and I found that very difficult because what I was doing is I was trying to see what they see, but I was completely ignoring the logic of the market. And as soon as that clocked for me, that's where the consistency came into place, because I was no longer doing what others would do. I was doing what I would do and what makes sense to me, regardless of whether I'm right or wrong in someone else's eyes. As long as I'm right in my eyes, I'm fine. But I hope this video made sense to you, and it gave you a different perspective as to what you see here, because this is, I think, these sort of screenshots make things more complex than needs be, um, because what you see on the charts here, right? This is all something that you sort of see in instinct, but this whole process was done using two rules that we teach in our mentorship. It's simply two rules. Our two rules are present here. Our two rules are present. Our two rules are present here, and not only that, our two rules are present again, because this entry was actually taken in the 5 second time frame, which I'm not going to go into, but our two rules was present again here. So what the two rules actually encompasses and what we teach is, regardless of how simple it sounds, the basis behind the two rules has all been taught, and it's all focused on taking away the thought process that's required, that comes in trading. Because what I've realized is over the years, our biggest issue is ourselves, right? Our losses comes from our own thinking and our own thought process and our own doubt even. And the issue with that is, because you're overthinking a situation, you completely miss what's happening. So the two rules have been put into place to take that away, take away the guesswork, and you're basically following a set of rules. However, with that, when you have rules, you can't be strict to it. For example, another question that I get on Telegram quite a lot from you guys is, what time frames do you focus on, and what time frames do you look at imbalance? What time frames do you look at your POIs? This is completely up to you, because there's no set time frame. I don't have a set time frame at all. I don't always go to the 5 second time frame. I don't always go to the hourly time frame. You have to find what looks clear. So my thought process of how I decide what time frame to use is purely by looking at what price is showing me and what looks visually clear for me. If it's not clear for me at all, I will not trade it. So that's the thought process behind that. So yeah, this was a trade that, as you can see, because a lot of people question if it's hindsight, because obviously I'll use a replay tool in this video, but I mean, it was sent I think about 8:30 or so, and it triggered about 9:30, and then hit TP in about 12 o'clock, I think. Yeah, 12 o'clock. So it's about 2.5 hours for this trade for 40R. Obviously, I didn't take 40R. I did take partials as well. So yeah, don't get it twisted in that sense. But yeah, I'll be doing a few more videos. This was just a video to come back. It probably wasn't as structured, and probably I don't know if it was useful for you guys. I hope it was. I hope something I said was of value. But yeah, if you want to join the mentorship, obviously feel free to use the links below. If you don't want to join the mentorship, but you want to have access to our course, we do have a monthly course program where you get access to a community in itself. There's two separate communities. There's one community for the mentorship, and there's one community for our course only program. You can join, you can stay as long as you like, and you get full access to the course. Because the only reason we started that is because some of you were getting scammed by people selling the course for God knows how much. It varied everywhere I went, and you weren't even getting the full content. So at least you get access to our content directly from the source. That's the only reason why we brought that in. But yeah, also we do have our bootcamp next month. Feel free to check our website out to find out more information if you wish to join that. But if not, I hope that you enjoy the free content. There'll be a lot more to come. Myself, James, and Nick will be, recording whatever we see, and we'll be doing more posts as well on Telegram. To be fair, I'm not going to say more posts because it's quite regular anyway. But yeah, we've been keeping the Telegram active, and to be honest, you don't even need to join the mentorship at this point because the content that we provide for free, it's pretty much what this video is pretty much what most smart money courses will teach you. The only thing is missing is the logic behind it, which is what the mentorship is for. But it teaches you the basics, and the logic behind it you can actually pick out from these does it make sense posts. So yeah, feel free to go through them, study them. If you haven't joined the free group, the link will be down below in the descriptions. But for now, I think I've spoken. I think I've spoken enough. It's nice to be back, and I hope to see you guys in the next video. But for now, take care, trade safe, look after one another, and oh yeah, feel free to like and subscribe if you like this video. If you didn't, then fair enough, you didn't like the video. That's fine. But for now, yeah, take care, and I hope that you have a good what day is it? Wednesday. I hope that you enjoy the rest of your trading week and have a good weekend. Actually, that was a bit advanced. You get the point. But yeah, take care.